this panel is effectively on open finance and electronic identification, and to the extent that these two are linked going forward. For this, we've got a very good panel with us. We've got Peter Kirstens, who's the advisor on technological innovation and cybersecurity in DG FISMA. So maybe I'll leave it to you, Jan, to Peter, whether you can say anything more than Jan could on this issue specifically. We have Svetlina Pankova, member of the European Parliament, who's been very engaged on digital developments from the beginning, following it very much, not only but from a consumer perspective and in the e-commerce space. We've got Mark Nelson, who's Senior Vice President Products and Solutions in Europe for Visa, and who's been working on a number of open finance solutions, or open, or should I say, digital finance solutions. And we've got Elena Antoknaza, who from Western Union, who is General Manager, Vice President Digital for Europe and Russia and some other jurisdictions in Eastern Europe for Western Union. Of course, a very important issue for Western Union, moving from traditional money remittances to the more digital space. So I think we've got a very, very good panel with us here. And maybe I do start with you, Peter. Normally I should kind of give the elected representative the first word, but I think in this particular instance, I give the privilege to you to set out a little bit of where is the Commission's thinking at the moment on open finance, and how do you see this linked to the question of electronic identification? Because only if we know who we are or who the other person is, can we think about sharing our data?
Well, thank you, Nick, and it's a pleasure to be here. You said that I may say more than what Jan said, but unfortunately I didn't hear what Jan said, so I don't know whether I'll be repeating him or will go off script. But really, open finance for the Commission started in a very limited way, but in a very deep way in the area of payments with the Payment Services Directive and the requirements for data access through APIs to account information service providers and payment initiation service providers. So that is a strong right, but it's actually very, very narrowly applied. And we are currently evaluating whether that major innovation, and people saw this as a major innovation in the regulation, is yielding or has yielded the effects that we sought. And these effects were mainly to break open competition and to put users more in control of their payment means. Assuming that PSD2 has been very successful in this respect, and this is, I'll start from that assumption, we will, but we still have to demonstrate it, we will be looking at expanding this approach to other financial verticals. Because if you give access to a payment account, why not give access to a savings account? And if you give access to a savings account, why not give access to an insurance account? And if you give access to an insurance account, why not give access to a brokerage account? And so you can basically open it up to all, in principle, to all financial verticals. To us, open finance is very much about putting the user, the customer, in control, in the driving seat. And there is a very, very close link to identity. Because some people think that identity is all just about who you are and when you were born and where you live. And that's a very basic idea of identity. But as digitalization progresses, we see that identity really evolves towards identity wallets, where more than just your basic identity attributes can be stored, but also other attributes, such as, for example, your skills, your driver's license, but also how sophisticated or unsophisticated you are as a financial services customer. And also potentially digital assets could be stored in that wallet. And if you take it a step further, also your access credentials for all of these different accounts, which I mentioned, your insurance activity account, your brokerage account, and so on. And by having strong e-identification tools and wallets, you can actually put a lot of power into an open banking or an open finance approach. Now, we are looking at it very much towards the future. This is not a reality today, but this is something which we expect to become a reality in the future. How quick that future will be with us, I can't really say. I like to quote Bill Gates on this, in the sense that he said that we always overestimate the amount of innovation we'll see in the next year or two, and we underestimate the amount of innovation that we'll see in the next 10 years. So I don't think this e-identity wallets are that will power open banking will be for next year. But if you are kind enough to host the 16th Afore FinTech regulation conference, and I'm sure you will, we can then look back and see how far we've come on these e-identity wallets and how important they are for our open finance environment that will then be a reality.
Thank you. Yeah, that's halfway through, 2/3 through the first day of this conference, a bit of a daunting thought, but I come back to you on that one. I mean, Svetlina, kind of, how does that sound from your perspective? I mean, it raises interesting questions about customer choice, citizen choice, but it also raises questions about the need for security, stability, the strength of those wallets. How do you see this? Svetlina, go ahead.
Thank you. Yes, hi. I hope you can hear me well now.
Very well.
Perfect. Perfect. Thank you, Nicholas. First of all, thanks for having me here. It's a pleasure to be here. I'm just gonna give a bit of a sentence of my background, because I'm actually coming from the finance world. I used to be in the finance sector in the UK before joining the Parliament. So for me, seeing that perspective from the two different aspects is actually quite interesting. Like, from one side, we were the receivers of the regulations, and now I'm in the moment when we're building them. So it's a pretty exciting time to be on the side of the regulator at the moment, for the main reason that the technological development is happening quite fast at the moment, and it's a challenge for the regulator to keep up with that, and at the same time is interesting marathon, or like a sprint probably, for the industry to be catching up on everything and to be able to implement the best solutions for its customers. And I know from experience that the finance industry is usually rather quite resourceful and competitive, and they do try to be as the front runners when it comes to something like that. So there are many different aspects that we're going to be discussing today, but as you've introduced me and we started with that, I'm just going to start with the first one, which is basically that proposal for regulation on digital identity we've been speaking for, and how it is beneficial for consumers and for the business. So the first background note is that that regulation that is being widely discussed at the moment is building upon and addressing the shortcomings of the so-called AIDAs, and it's improving on one hand the effectiveness of the framework, and on another hand it is extending the benefits to the private sector, which I think it's pretty important point for our discussion. So the digital wallets, as we envision them at this point, will allow customers and businesses to use the benefits of their digital identities across the EU without sharing too much personal data and being in full control of the data they're sharing. So we've seen that the AIDAs had already been like vital for some of the financial institutions, for instance, in streamlined transactions, customer verifications, client onboarding, and since the fourth anti-money laundering directive, the electronic documents already qualified as a valid document for customer authentication and verification. So, which makes the work at the financial institutions much easier and secure enough from that perspective. So this also goes further in applications such as KYC, for instance, as we've said, which is crucial to be able to do it online and via safe softwares and safe programs. So I'm just saying that what we are discussing here when we're speaking about digital identity, it would help the customer experience and protect their rights, and at the same time it would be good instrument for many industries, including finances. As I said, as the financial industry is one of the front runners when it comes to such technologies, they have already started applying them. So I think I'm going to be interested to see what are the shortcomings they see when we're speaking about those things. But in terms of introductory remarks, that's what I wanted to start with. Of course, there are a lot of points I'm sure we're going to discuss further on in the debate in terms of the consistency of the approach we should be taking when we're speaking about regulation like that, the stakeholders, the technological development and interoperability behind that, the privacy and cybersecurity matters, which I'm sure concern all of us on this panel. And of course, the role of the EU is quite crucial, but I'm sure those are points we're going to raise more or less in the debate. So I will stop here, and I'm looking forward to hear what our representatives from the industry have to say.
Thanks, Svetlina. Yes, I think we come back to particularly questions of design and what type of public policy intervention might be needed to support this. But maybe, Elena, I come to you because KYC was mentioned, fighting anti-money laundering in the context of wallets. And I want to come to you because I know, Mark, you will talk a bit more about open finance, so what these wallets enable. So, Elena, how do you see the importance of these digital wallets emerging from your perspective?
Well, first of all, good afternoon, everyone, and thank you for giving me a chance to bring Western Union voice to this conversation. I think it's the perfect place to start. And as you know, at Western Union, we provide a quite articulated platform to serve our customers with their money transfer needs. So that's where it really comes to 200 countries and territories that we've reached, and 130 currencies, and a multitude of bank accounts and mobile wallets, and also approximately 600,000 retail locations. With that in mind, what you said, Nick, obviously is very important because it's the foundation of every transfer of money or any payments, And as a service provider and payment service provider, obviously, this is particularly important for us to be able to unequivocally identify our customers and KYC them as the regulation requires us to do in every country that we operate. So one thing that we really are looking forward to working on is the interoperability of the solution that is being designed and enhanced. That would be very important for us to be able to really verify our customers and identify first them in the jurisdiction that we work and the countries that we work in. So the point is on really making sure that, as was said earlier, customers are in charge and users are in charge of what they can or cannot share or want or do not want to share. From our perspective as service providers, it's important that users and customers really understand what they are sharing and why they are sharing. I'm sure we will have a chance of discussing more during this panel. But as an example, if I decide just to share, my initials, the initials of my name and surname, because I think, it's better to do that rather than sharing my name and surname. For us as service providers, in between, verifying a customer and identifying a customer, that would mean that we are unable to really verify you because we only know your initials. So that is one of your rights to just choose what you want to share. But on the flip side, you should be aware that that would not allow us to perform, our verification or our identification. So I think it's important that, as we discussed, the users are in charge, especially when it comes to verification and KYC, but they also understand the depth and the implications of what they decide to share. So there's some work that we need to do together to educate once the regulation is firmly decided.
Yeah, and I want to come back to the concept of both choice and control, customer and citizens' control over their potential wallets. But I think, Alina started talking about some of the use cases. Mark, you're looking more at the open finance side of things, which seems a bit counterintuitive, given you come from Visa and we all have these little plastic pieces in our pockets. So how do you see the link between the two, and where do you see things evolve more in the open finance space? Come back to Peter's introductory comments.
Yeah, can you guys hear me?
Yes.
Okay, perfect. Thank you for having me on the panel. As you mentioned, I head up product for Europe, but I've been at Visa for a long time, 17 years, and most focus on digital identity and authentication, making sure that when you buy something online, we have enough confidence that this is you and that the bank can then approve that transaction. So we've been dealing with identity and digital identities now for 25 years for e-commerce. And the thing that when people ask me about digital identity, I generally say it's somewhat easy to do in a small scale market, but as you get to a broader market with more people and more complexity, and you get cross-border and then you get global, it just becomes really hard for it to scale. And what we see now, even after 20 some years of working on this, the way that we've implemented identity almost varies on a bank by bank level. And so you get different experiences depending on which bank you're on to determine that, yes, this is you when you conduct a transaction. And we're a scaled business at Visa. We operate in nearly every company or country in the world. And when we look at how this then translates to new innovation like open data, open banking, open finance, as Peter mentioned, the whole point of this is to have consumers safely share their data with a third party in exchange for something of value. And where we see some of the challenges today is about 20% of the time, it's not uncommon for a consumer when they want to take up a service that uses this kind of open banking technology, there'll be a drop-off. And so it's not, so like I said, 20% of the time, there could be something that breaks. It could be a system error that breaks or the connectivity isn't working, but oftentimes it has to do with verification. So the consumer is trying to verify their identity and something breaks in the process. And we see this in the card business all the time as well. And so it just shows you just how critical it is to get digital identity to work smoothly so that you can get more and more people kind of using these technologies and these services confidently. And the reason why we see this as just such a huge benefit for everyone is open banking, open finance, it gives broader people access to financial services that they didn't have in the past. And we've talked to some banks who have been using some of the open banking data sets over the last 2 years. And it really is incredible the types of results they're seeing, whereby if you want to apply for, let's say, a credit card, the bank typically will check their credit report and see what is your credit history. And if you don't have a credit history, it's often difficult for you to actually get a line of credit or to get a loan. But they're using open banking data sets to basically look at your bank account information so you can see, yes, you have a stable income. Yes, you save more than you spend. And so we've seen some banks get a 20% improvement in onboarding customers simply by using this open banking data set. And so it's just such a benefit for consumers, for markets, for industries to take advantage of this technology and the innovation that can come from it. And it goes back to the more we can get digital IDs to work better and the more seamless authentication can become, the more people you can bring into this ecosystem to have confidence and trust and all the resiliency that you need for something like this to truly scale across Europe and then across the world as well. So, we're super excited to be part of this space. And we think that a lot of the technology and techniques that we've used over the past, decades to make sure that we can safely and securely share data with third parties, a lot of those same techniques we can deploy in the open banking, open finance space, just so that it truly can scale to what it should be.
And maybe that's an elegant transition to kind of the question around the design of the whole structure. I think before I come to that, just remind everybody in the audience to ask questions. It's your opportunity. I see one or two people raise their hands. So that doesn't work very well. You need to kind of ask the question and then we can kind of bring it in. I think, Svetlina, come back to you. I think you rightly said, you know, the whole proposal on e-identification at least builds on the AIDA's proposal. And the AIDA's proposal was to allow data to be shared between individuals and public authorities. And the industry was always saying, we want to expand it to commercial transactions. I mean, what do you think are some of the design elements that we need? You already mentioned interoperability, but does it mean that we just need to have public wallets that are very secure? Should it be, as Mark said, you know, private solutions? How do these solutions interact with each other? So what do you think are some of the key, let's say, design elements or requirements that such wallets should provide from a public policies perspective?
So from our perspective, as I've already touched upon, and I think Mark more or less had just mentioned it, and also Elena with answering the question what and why is being shared. So the two main elements, as you've already said, is first of all, we need to ensure that the systems and the technologies that are used in those wallets are interoperable, at least across the member states. But if we're speaking about like global use and global industries, which we mostly have, especially when I'm speaking about the digital finance world, I think we should also take it a step further. So interoperability of the systems is crucial, both for security and safety, and also for the consumer experience I have to say. And the second thing is the privacy and cybersecurity. I mean, I'm also speaking as a regulator, and I'm representing a certain political group, but we need to have the highest level of security, and we have to have mandatory certification for the technologies we use, which are in accordance with the Cybersecurity Act. And of course, this raises some questions in terms of we've been looking at some of the opinions from the experts, and they have expressed the concerns regarding for instance, the persistent identifiers and whether they could leave a footprint of the digital activity, which raises the concern about the data privacy, and like if that footprint could be tracked afterwards, and like if it's kind of invasion of the customer privacy and anonymity of customers. So this is something we should be looking at. So the two main things are, like, of course, the technological aspect in developing those things and making sure that the systems correspond to each other and like they're compatible. And the second bit is cybersecurity, which from one side protects the industry, from the other side protects the consumers. But at the same time, it kind of guarantees the privacy of data and doesn't leave a digital tracking path behind the behavior of each one of the consumers. And as I'm repeating myself again, but like according to the experts, this might be a bit challenging at the moment.
I mean, building on that, because I take your point, it's a bit like your passport. It needs to be secure, otherwise, you know, you have an issue. But Elena, I mean, how do you see this? Because as Svetlina just said, it was primarily, at a minimum, it should be between member states, so within the EU. But really, ultimately, a passport is used when you travel internationally, not just within a small block. So how do you square maybe the aspiration for its international use, which from a Western Union perspective, with your corridors which go outside the EU quite a lot, with this need for security and safety? How do we square that circle?
I think that's a real challenge, actually, because as you said, even within the member state, we may have some difficulties or some need probably to not just provide standards, but also to a certain extent mandate interpretation rather than provide a broader transposition, as probably was the case in some instances in the past. With transpositions allowance comes fragmentation of interpretation. So what that means from us as providers is that, for instance, if a member state is allowed to offer 5 different EIDs to their citizens, we should incorporate those 5 ways of identifying customers when they log in or when they send money from our platform in that specific country. So clearly, even from a technology perspective, let alone the customer experience, which is also equally important, but just stopping at the technology perspective and implementation is a big deal. So anything that goes in the direction of simplifying and uniforming, even within the member state, would be incredibly welcome. And then, of course, if we start with discussing also outside of the European member states, on the international side, what the standards that we use are and what is likely to be adopted when managing cross-border payments or transactions, as in our case, then clearly it's easier also to adopt or to read and understand, also not necessarily adopt if a foreign country doesn't really want to or is not subject to, but at least to read and understand the formatting and the criteria that are driving our EID proposals and schemes. And I wanted to briefly also touch upon one point that Svetlina was making on security. I think that's paramount every time we provide any kind of digital solution. And I wanted to expand this view to consider not just the individual companies or member state security. One may think, I'm in a relatively advanced state or company, and I am sure I can provide enough security to my users or citizens. But on the flip side, I think it's more of an industry need for security and trust, because the moment of one of the players in this industry fails, it's not just their player failure, it's the industry failure, it's the trust that goes away. And as we know, trust is hard to gain, but easy to lose. So we need to make sure that we, as an industry, are all consistent in, guaranteeing this security.
I think one thing that's become clear today, a word that pops up in virtually every panel, is trust in the digital space, how to get back to a point of trust. Maybe coming to you, Mark, which is it's interesting. I think Alina made that point, the tension between some competition in the market, but on the other hand, not having too many different wallets available in a particular market, because then you have interconnection issues. We hear about the need for certification, we hear about the need for standardization. So you clearly are working on a market-led solution, so to speak. I would be interested to hear a little bit how you see that tension, but I'd be also interested to come to Peter's point at the beginning of wallets and open finance. Where kind of strategically do you see the open finance debate go? When Peter started, he said, look, we start with payments, but we might go into kind of savings account, we might go into brokerage accounts, we might go into insurance. How do you see that evolve coming out of what is a more traditional payments company?
I think in general, I think what payment companies have done is found ways to securely send data between participants. And it didn't happen easily. Like if you think about when we first started buying things online 25 years ago, merchants were storing payment account information, the expiration date, the security codes, and then all these data breaches happened and millions of really sensitive payment information was stolen. And so the industry created, the data security standards that basically put in place, here's what you must do. If you're going to process payments, here is what you must do to secure that data set. And that same concept is going to be potentially at risk as we get more and more of the customer data being shared with third parties. We're going to have to still have a really strong framework in place to certify that the third party who's collecting the data has the right security, the right encryption technology in place. And this is where someone like Visa can help, because if we're in this space and we're going to send data to a third party, well, if we don't really think that third party is certified to properly store the data sets, well, we can store it on their behalf and we can send a tokenized version of the data down to the third party. So that third party maybe they don't have a massive security team, so they can just use anonymized, tokenized data on their local site, and they can use it. And then when they need to access the real set of data, it's stored within Visa or a similar type of system. And so there's ways in which we can help facilitate that exchange of information in a way that's really secure and safe, that protects everyone from in the ecosystem. And so it's not that dissimilar from what we do today, because in Visa, we don't technically move money. All we're really doing is moving secure messages across the entities. And that's really similar to open finance as well. So these same concepts exist. So that's one of the roles in which we can see ourselves playing a role, is helping define what are those minimum standards for data security, data protection, what is the cryptography that you need? And hey, if you can't do that, we can help you in that space. And so, hopefully that gives you an example of kind of where we see us playing a role. And then going back to just, some of the previous conversations on interoperability of EIDs. One thing that I think is maybe not well known is, because we have an international standard on authentication, we're actually already using, we see like Norway, for example, uses Bank ID. And if you're a Norwegian customer and you're in, let's say, the United States, and you want to buy a ticket and it's an online purchase, when you buy that ticket from the merchant's website, it's going to get sent to the bank. The bank then uses Bank ID, and the consumer is verifying themselves using the Bank ID credential to say to the bank that, yes, this is who I am. And so you already see instances whereby these EIDs can be used globally for authentication. It's just using a global interoperable framework for exchanging messages between the parties. And so in this implementation, the bank, think of them as a distributor for an EID scheme. So they don't own and manage Bank ID for Norway, but they help implement it, and they help find ways to make it interoperable within some of these use cases. And I think that's an exciting part, that once again, that we can help play a role with that, since we have connections to all the banks around the world. And so anywhere you travel, if you want to do a financial transaction, we can connect it to whatever EID scheme there is by virtue of that connectivity to the banks. And so I think that's where you think about the tension between kind of the commercial and the regulatory frameworks, is you do need both. You need distribution partners of these EID schemes so that you can get it to work at scale in a way that can be deployed globally.
It's interesting actually what you say, Mark, and I confess I hadn't thought of it in this way. Effectively, you need three elements, isn't it? You need a certification, you need security, and otherwise it's nothing more than an electronic message, effectively, which includes just a different bit of information, which makes this more manageable. Now, if your vision works, coming to you, Peter, then don't traditional financial institutions have a bit of a problem? Because if you combine this power of identification with open finance, a lot of financial institutions lose the one thing that can be seen as being very important, that is the interrelationship with the end customer. Because at the moment it is the bank or the financial institution that takes your passport, identifies you, and kind of onboards you into the financial system. And once you're on the financial system, having a bank account, you can effectively do a lot of things. And then you're reminded every 2 years to update your information, which is very annoying. But you're in the banking system, so to speak. And it makes it harder for companies like Western Union that maybe have more once-off transactions, are not bank account based, to get into that. Or other fintech companies. I mean, it will fundamentally change the balance of power, so to speak, between traditional institutions that have this customer-facing experience and, let's say, innovators. And if you put on top of that the fear about big techs that already have a lot of customer relationships, are you in a way disintermediating the established industry to a point where they become a utility behind the scenes? How do you balance that?
Well, that is one way of looking at it. You could indeed say the banks have a problem, but I see it more as the banks have an opportunity, because as Mark explained, it's not only about data and identity data. Someone needs to certify that this data is accurate and current. And banks, for example, because they have regular contacts with their customers, are ideally placed to make sure that this information is accurate and current, much better than, for example, the government. You probably deal with the government once a year when you pay taxes, if at all. But you deal with your bank, not that you visit your bank every week, that's not necessary, but you interact with your bank on an ongoing basis. And they can therefore certify this information. And other companies in the digital value chain may be willing to pay for that. Now, these are not huge sums of money. These may be fractional amounts of money, but it all adds up. And Mark will know this very well, is that individual pieces of information that transit through Visa don't yield huge sums of money, but all of the small things that a company like Visa does do generate a good revenue stream. And so banks see there's an opportunity for banks to reinvent themselves here as not only curators and custodians of money, but also as curators and custodians of identity and of certification of identity.
Yeah, I see your point, although one might argue they're not maybe the only parties that can certify, could also be in the e-commerce space, others who might know your patents even better. So, but I don't disagree, I'm just kind of raising issues. But something else that Open Finance and EID do is it puts much more onus on the individual, the responsibility of the individual in the process. And Elena, I've often heard speakers of Western Union say, look, that depending on the use case, a customer will use very different forms of payment, for example. Your customers can be very sophisticated depending on how they interact. But how do you see, you raised this point about empowerment, control. How do we ensure in such an environment that if a citizen, if an individual has so much choice, that they take the right decisions? How do we balance this with customer protection, so to speak?
I think is a very delicate topic, Nick, and probably one that will make it or break it in terms of usage of electronic IDs in general. So I don't have a clear solution, unfortunately, but I know what the terms of the problems are. I believe from looking into our customers, talking to them, having focus groups on an extensive basis like we do, what is really important is not so much to provide a good technology solution. Of course, it has to be simple and understandable. That's, I would say, is a precondition for anything in digital to work. But also to provide enough information, and I'm not saying too much, but enough information for the customers to understand what the implications of their choices are. So back to the point on, I can decide how much of my identity information I want to share with any player I interact with. But I have to know what the consequences are. So back to my initial example, if I only decide to share my initials, I need to know that I cannot get verified with that particular transaction or payment or institution that I'm interacting with. So I think that's really important to also give, with ownership comes responsibility. So here's the responsibility of, I decide not to share, and I know that I have to maybe go through some document upload or some other ways of providing my identity details so that I can perform my payment, my money transfer, or my otherwise identification. So it's about, again, reinforcing the trust without submerging users and customers and citizens with too much information, because too much information equals zero information. And at the same time, giving them the option to change on a dynamic basis what they want to share and know what the results are about deciding not to share or sharing. I think it's kind of also an industry-wide education and a regional-wide education that we all the players in this industry have to put together, similar to what we do with strong customer authentication when it came into play and still rolling out. Everyone was trying to educate their users, their customers, their citizens, what it meant to do a strong customer authentication, bank by bank or financial institution by financial institution. It took a while for users to ramp up because it wasn't always easy and because we have different ways of getting this strong customer authentication, but we're getting there. And I think that's exactly what we need to do with the ID expansion and improvement that we're discussing about here.
I think you raise a really interesting alternative, or not alternative, additional use case here, because if the wallet and the identification works well, we might move away from strong customer authentication at every single transaction to kind of an onboarding experience where you have to do it. But once you're on the wallet, yes, you have to re-authenticate every so often, but basically it kind of solves that problem, which is very exciting in itself. But Svetlina, moving maybe to what this means for public policy, in the sense of if we want to make this work, I mean, there's the risk that we've just talked about, the opportunity, but also the risk of are citizens sufficiently equipped and educated and informed to actually take advantage of these wallets? But also, what type of policy interventions do you expect at the European level or would like to see to make this work in a safe and reliable way?
I think that's the question all the institutions here being asking. But I'll try to address your question in three probably most important areas I see as part of the answer. So what should we do as the regulators and how we should ensure that it's best for the consumers? So the first of all is we should ensure that there is a consistent approach among the institutions in Brussels. And I know it might sound weird to say that, but when we're speaking about complicated regulations like that, on one hand, you have the European Commission with all the underlying DGs that are the experts in certain matters. And on the other side, you have the European Parliament with the underlying committees that are tackling the different aspects of the problem. For instance, the Internal Market and Consumer Protection Committee, the committee that's dealing with the economic matters, that should also be involved, and it's currently not involved in that package, for instance. So our first step, I think it should be to ensure that there is a consistent approach among everyone. And we should all acknowledge that one of our main goals should be to set, I got inspired to say that by what Elena has saying just now, we're setting a minimum standards like that everyone should meet. Like when we're speaking about evolving technologies, we cannot envision everything that's going to happen. So we have to set a standard that's met in terms of like covering all of our privacy matter considerations, cybersecurity, the operations of the system. And if the technology can do better than that, I mean, it is welcome to do so. And we face that issue in many other proposals that we're looking at, especially when we're speaking about the digital transition. You can imagine that this point comes often, quite often, but we need to set a minimum standard. And here I'm using minimum just to cover like the most important aspects for us. It's not that it is a low standard, but it's just like building upon or like making better development. Taking that into account is absolutely not forbidden, because we had that question on some other files I've been working on in terms of coming from the industry, like if they can do something better, and if it's not allowed, of course, that's not the case. Relating to your question, what else should be done? The second aspect I think quite important is to identify the stakeholders correctly, like all the stakeholders. And here I'm speaking about the industry. I'm speaking about consumer organization, supervisory and security bodies, the regulators, and the regulatory bodies of the national the national regulatory bodies of the member states, because we need to take into account some of the national regulations as well when we're speaking about that. So first, as I said, consistency in the approach among the institutions here. Second, the right stakeholders and their proper involvement. And third, which has already been brought by Mark and Elena in several occasions, why don't we look at examples of where this has been done already? Like I'm speaking about examples even from abroad, like in terms of other countries who have done it. Like the first that comes to mind in terms of digital identities, and like especially in the finance sector, is probably going to be Singapore. Like there are many examples out there where this has to be proven to work. So we could look at the examples and use that that data that's already there to make it better. So that would help us basically probably skip some of the steps and not repeat some of the mistakes that could have been made in the past. So I would say those are the three main aspects.
No, thank you very much. And actually, we've got the Singapore financial service regulator speaking tomorrow morning, so it'd be quite interesting what they say on this. And as you say, they are very advanced, and there will be other examples as well. I think you raise another really interesting point, which when we look very narrowly at the EID proposal, there's a parallel work stream on what we call the toolbox, where actually use cases are being explored. And sometimes there's a bit of a wonder why certain use cases are being identified and others not, why certain ones are prioritized or not. And I take your point on Econ being more involved in the discussions. But Mark, building on this, so if we then say, okay, we build a minimum standard and we want to have interoperability between private and public wallets, we don't want too many wallets. What do you think should be the appropriate policy response to what's happening in the market at the moment? How do we ensure, for example, that you can develop what you want to develop, but somehow you need to connect with maybe solutions that are less optimal than your own? How do you see this evolve, and what would you like to see from policymakers?
I think from policymakers, ideally, there's a couple of things. I think making sure that there is some incentive for the participants who have to be involved to really invest heavily in it. And I think if you look at PSD2, the banks had to create those APIs, but they had no real commercial incentive to do so. And so you still see quality problems today, years after the APIs are supposed to be fully functioning. They're not fully functioning yet. And I think the more you can find a way to create and distribute value amongst the participants so that they invest in the right solutions to make it work, to make it scale, I think that is like critical to start from the design. And then I think in general as well, have it, rather than being very prescriptive on the technology, have it more kind of outcomes based. And I think of, like, once again, if you look at PSD2, we had some very prescriptive techniques on what you needed to do to reduce fraud, as opposed to saying, hey, you as an industry, you must be below this fraud threshold. We don't really care how exactly you get there, but this must be the outcome. So I think having more outcome-based decisions as opposed to this is what you must do, it generally helps, because I think what happens is, if it's too prescriptive on the technology, you end up sort of stifling innovation in a way that you just wouldn't even think about. And a good example is on the SCA requirement for contactless transactions, every fourth or fifth time you have to enter your PIN, which seems pretty harmless, but there are markets where the PIN technology is kind of old, and it's called offline PIN, which means you have to insert the card into a reader, which sounds not that big of a deal. But if you think about it today, your cell phone can be a POS device. You can just download a payment terminal software, and then you can be a merchant and start accepting payments immediately. But the problem is, if you're interacting with a customer and they have their card in front of you and they want to tap their card against your phone, if you now have to enter a PIN, you can't, because you can't insert your card into the phone. And so there's all this innovation that's really good for the industry. It's like cheaper technology, it's very forward thinking, it's super safe, but we can't actually implement it because we have this weird requirement around, number of times you have to enter a PIN. And so I think as long as we can be outcomes based as opposed to really prescriptive on technology, that would be very beneficial.
You might have answered the question, but just a quick follow-up question, which is, I take your point around the PSD and banks not being incentivized to really develop maybe the best APIs that are possible to allow for open finance. One response that we're seeing is that there's now a working group to create an EU-wide, we call it SEPA Open Access Scheme. I call it the mother of all APIs, basically that sits above things, kind of under the guise or guidance of the ECB. How do you feel about that solution? So rather than going for a fragmented approach, go for one single point of entry, so to speak.
I mean, I think that will certainly help. And I think in general, the way I see it, this is it's fairly similar to ISO standards. And ISO standards have been around for decades, right? And so you create a standard that's as broad as can be. And I think of that as the foundation. And what you can just allow for innovation on top of that standard. And so some markets, you may be able to offer incremental data sets that a third party is willing to pay for, that the bank could offer out. And so I still think you can do a hybrid whereby you have some regulatory minimums, and then you allow for kind of commercialization optimizations on top of that. I think that would be the model that works the best and allows for enough flexibility for innovation, and that innovation can be very market specific depending on kind of what the local kind of merchants and the consumers are willing to share. And so I think it does provide a nice foundation for that.
Yeah. Maybe to Lina, I think interesting points raised here. In case you've got kind of reactions and thoughts, please also onto the public policy space. I would like to hear those. But I also have one other question, which I come to maybe at the end around commercialization of these models. But first, on public policy, what would you like to see?
Well, I think we touched upon some of the points already. One is the interoperability. And as we just said, it may not come in the form of mandated technology adoption or formatting, but to a certain extent, it has to standardize format. And yes, we can certainly move to, as was suggested by Mark, and I really love the suggestion on output-based measurements. That will though flip the responsibility of certifying the compliancy of these, whatever method are implemented output-based to the regulator or to the European bodies, because if anyone implements those just looking at the output, then who certifies that the output is enough and the flow level is low enough? So I think is the way to go in certain ways, but it also requires a lot more controls, measurement, touch bases over the course of the time. So it may be something that we look into. The other point is back to the trust and the user being in control. I think that's really important to reach the goal that we all hope is reached maybe before 2030 as expected, to really expand the EID scheme over and above the current uptake. And if that happens, it's also because the rules are designed in a way that are comprehensible, inter-usable and interoperable, and really simple to implement from a consumer standpoint, but also from payment services and intermediate services like us.
Thank you. Maybe one quick follow-up question, which is kind of one of the elephants in the room, which is about revenue sharing and revenue distribution as a result of this. If we move more and more into these type of models, for example, not only, but Western Union is specialized in dealing with all the complexities across the world. You're very good in making instantaneous payments across the world. Introducing more seamlessness into the whole system in a way also makes it easier for new parties to enter the market. And how do you see this impacting not Western Union as a company, but the whole payment space and the competition between different players in this market?
Well, I think you raised a very good point on, in general, revenue share, but also the price tag that is attached to information. And in this case, to financial information or to identification information. Now, the theory, and I very much like the way of thinking, the thought that you put into this conversation, is that if I, as a user or a citizen or a customer, am in control of my data, I should get a part of those revenues, or at least I should be able to gain from sharing my data with someone in terms of paying less for certain services, or having access to a wider set of options than I would if I didn't share my data. So I think it's also a redistribution of some of the value within the value chain, probably towards, again, ownership, responsibility, but also positive values in sharing some of our data and information.
Thank you. I come to you, Peter, and I combine it with the one question that's come in that's a really easy one. That's why I kind of turn it to you, which is, and it's not, so I'm a bit cynical, which is basically the governance structure around all of this. So the question is really, what should the governance structure around this whole EID framework be at the European level? You know, private, public, how do we bring this together? And how do we deal, that's the explicit question, with potential disputes or losses that might be initiated through this. So the liability that might be attached, so to speak, with breaches, but not even going that far, but what would be your vision for the type of governance to make these frameworks work? Because EIDAS at the moment relies very much on public authorities, and that's it effectively.
That's a very, very difficult question, because different member states think very differently about identity and the relative value of government issued or government controlled identities versus privately issued, privately certified, privately controlled identities. And I think that we should go for a governance structure that works for everyone. And I can't say at this stage which one that is, because member states have such different views on it. And it may actually not be possible at all to come to a workable consensus on it, let alone unanimity, or workable majority on this, let alone unanimity between the member states. That's why I think we have to be very careful with regulating and legislating in this space, because often in Brussels, legislation is seen as a solution, but we have to make sure that legislation does not become, once adopted, that it becomes the problem, and that it starts framing or limiting innovation, or becomes a hindrance, or, as Mark pointed out with the example of the pins, something that sounded like common sense a couple of years ago may not be common sense anymore, but it's now hardwired in the regulation. So if there has to be regulation, it has to be very, very basic and on outcomes oriented, on foundational principles only, nothing else, like looking also a bit at competition and concentration, maybe on revenue sharing, because I think revenue sharing is very important, because we have to make sure that in developing these innovations, and I'm sure they'll come, that we'll generally go for revenue sharing and not for revenue accumulation, that different players in the chain all want to get a piece of the action. And at the end, all of this identity use and electronic identities become more expensive for the end users. I don't think that is the idea. And so currently we will have to see a revenue redistribution, and that some will gain from this, some will lose from that. And those parties that stand to lose from it, of course, will not be very cooperative or very favorable towards these new identity and open finance models.
So ultimately, not too prescriptive, but nonetheless public policy intervention to force certain parties to come to the table? Or do you think it is more the compelling arguments in favor will ultimately bring people to the table without the public policy stick?
Well, if history is any guide, applying common sense and appealing to the natural superiority of an idea has rarely gotten us anywhere. So unfortunately, and I really say this, I really mean this, unfortunately, often it requires regulation to force people to do the right thing. And if you look at open banking, it was very much, in the PSD context, it was very much opposed until many banks start seeing it as also an opportunity, as an advantage, but they need to be forced to embrace it before they actually started embracing it. But I personally would guard against trying to regulate all the details of the open banking, all the modalities, because the more detail there is, the more loopholes there will be, the more complication there will be, and it won't work. But the principle that financial data belong to the individual and not to the financial services provider is essential for open banking. And given that the financial data belong to the individual, it should be for the individual to share that information with whoever he or she wants, or not to share it with anyone if that's really the choice of the individual.
Thank you, Peter. And I think, conscious of time, I think I leave it there. But you missed what Jan said. But Jan said that you're still in the thinking phase, and you will have to come up with a solution by give and take this time next year. And I think we all wish you luck with that. And I think Svetlana's point about bringing everybody together is better than different parties, trying to solve the problem in isolation. And it's encouraging to see that the industry is already partly down that route, and trying to find solutions. Thank you to all four of you to what I thought was a very, very interesting discussion, and one that I fear we will have to come back to at least in the 7th conference. I'm not sure whether the 16th we'll see about that, Peter, in a while. Thank you very much to all four of you. And with this, I will pass to the next section.